And so this Bitcoin ETF is coming exactly as you suggest, at the right point for all of these things. And if it plays out like it has done in the past, and there's no guarantees of that, then generally speaking, you will start to attract a lot of new capital into the space. That's always been the case. So currently in crypto, there's 516 million wallets, but they grow at about 100% a year. So if that's right, we'll grow by another 500 million wallets somewhere between 2024 and 2025. And that's a lot of new capital. It's a very big deal. It's come at exactly the right time. And then the market will start focusing on the ETH ETF.
Yeah.
Which, by all accounts, seems like there's a reasonable probability that's going to come.
In recent days, around a dozen companies, including BlackRock, Fidelity, and Grayscale, have actively pursued the creation of Bitcoin ETFs. These entities have not only announced their intentions but, in some cases, have adjusted the fees they plan to charge investors. This signals an impending intense competition to attract investor funds. These ETFs are categorized as spot ETFs, holding actual Bitcoin, in contrast to the already approved Bitcoin futures ETFs, which deal in derivatives contracts tied to Bitcoin. The approval from the SEC follows years of delays and rejections of various attempts to launch spot Bitcoin ETFs. This development comes a few months after a significant legal setback for the SEC, with the D.C. Circuit Court of Appeals ruling in August that the SEC's decision to reject Grayscale's attempt to convert its $26 billion Grayscale Bitcoin Trust into a spot ETF was arbitrary and capricious. Raoul Pal, a macro investor and crypto advocate, discusses the ETF approval's impact on the crypto world, highlighting that it not only represents a victory for the crypto community but also provides an opportunity for the fiat world to participate in the grand landscape of crypto. Now, let's delve into the video for further insights.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
We've been building this new digital world, this parallel kind of financial system. Let's call it crypto land. And then we've got fiat world, which is the existing world that we live in. And most of the world's liquidity and money exists in fiat land because it's much bigger than crypto world, crypto land. Now, what this ETF is basically a trade deal between these two countries. So people in fiat world can now go and invest in this new country easily. What it's then is a factor of, like with all trade deals, is will my return on capital be higher by investing in this emerging market versus in my domestic economy? Now, if we look at last year's price performance and typical annualized price performance of crypto over time, taking into account it has huge cycles, the Bitcoin economy grows at kind of 100% a year. So in which case, there'll be a lot of money coming from fiat world into crypto land. Another way of thinking about this is, okay, that's great. So it's likely to attract a lot of assets over this cycle. And a lot of assets will wash out when suddenly the returns aren't as good anymore. So we will see that. The other way you can think about it is we are IPOing Bitcoin, and we've all been seed investors or Series A, Series B, Series C investors, and we're now about to go to the big stage. And, many of us are kind of used to recent years where, generally speaking, IPOs haven't done great. But this is early cycle. There's not much investment in this space yet from fiat world. So the chances are we're going to attract a lot of assets. So short term, don't really know. It's not really my area of interest.
Yeah.
What my area of interest is could this attract 10 billion, 50 billion over time of new capital into this emerging market of crypto land? And the probability is pretty high because, a lot of people are looking for higher returns, higher return opportunities. You can see it by the amount of activity that goes on platforms like eToro, in things like Tesla and other technology stocks, right? People are searching out the risk curve because a lot of people are 401k investors in the US. So they invest in their pension, but then they also like to have other assets that maybe have a different risk reward profile. So over time, I think it's very, very positive. It just opens up to more people. Those of us who've been in crypto a long time know how difficult and painful it is to open a wallet, execute your own trades, do all this thing, think about self-custody. Now, platforms like eToro have really helped people onboard and get comfortable with this, but this makes it even easier.
Supporters of a spot Bitcoin ETF have consistently argued that having a regulated trading product centered on the world's oldest cryptocurrency would provide institutional and retail clients with exposure to Bitcoin's price movements. Importantly, this exposure wouldn't necessitate the establishment of wallets or direct investment in the digital asset. ETF shares, for instance, would be accessible to any U.S. investor with a brokerage account. Discussing his outlook for the 2024 bull run, Raoul Pal highlights various sectors where he anticipates liquidity influx, providing insights on leveraging this information for maximum benefit. Additionally, he touches upon NFTs, suggesting that despite their current subdued appearance, there's a likelihood of a rally once prices rebound. Now, let's listen to Raoul Pal's selected picks for the 2024 bull run.
I've coined it the everything, everywhere, all at once cycle. So most of the key technologies have been in place for a while now.
Yeah.
In terms of the applications layer, but it's the adoption of the applications layer, the adoption of NFTs by giant corporate brands, the adoption of blockchain rails for a whole bunch of different things, from traditional finance of putting, equities or derivatives or whatever on chain. I think that is coming. I think we are going to see, with stuff like Solana being able to create 1 million NFTs for $100, well, that means ticketing or any high frequency contractual stuff can happen. We're seeing Visa build on top of that. We're seeing massive speed increases again in Solana, where we've got Firedancer that has 1 million TPS. So that means high frequency trading can happen. So, new centralized exchanges and the rails for the finance system, okay, that can go on chain. We're seeing large corporate brands building using NFTs and other Web3 technologies. We're seeing the adoption via RAAs and the ETFs and other things. So we're seeing a lot in the space. And I think that continues. I think the other thing we all see is gaming. We've all been waiting for the gaming to meet Web3, and we're seeing quite a lot of evidence that that is on its way. We've got blockchain meets AI for authentication of who we are. We're about to go into an election in the US. And in fact, we're going through like 60 elections around the world. We've never gone through an election with AI. And the deep fakes driven by AI will mean you can't trust anything you see in the wild. Yes, you're on the eToro platform watching something. Well, it's authenticated by eToro. You go outside, you don't know whether an interview you're watching of you and me is actually the real interview. So I could be saying crazy things and everyone thinks, well, this was a real interview, right? This is a huge problem. How do we authenticate who humans are? How do we authenticate content? And I think blockchain is part of that. So I see the opportunity for that as well. In terms of NFTs themselves, we're going to see a lot more use cases come. It's not just about your monkey JPEGs. But NFTs at the high quality asset side, we're talking about Beeple or Xcopy and these kind of famous artists that are very expensive. This thing trades exactly like assets do in fiat world. So in fiat world right now, the economy's slow, and the assets that require disposable income, trophy assets, lag because nobody's got any money yet. And so if you look at the price of Rolexes, you look at the price of wine, you look at the price of used cars, look at the price of art, it's all been going down because nobody's got any real money yet. Yes, the stock market's gone to new highs, but most people haven't participated. Everyone's businesses are still a bit slower than they want them to be, etc. It's exactly the same with NFTs. NFTs lag the price because really they start taking off when the price goes back to all-time highs. And people are like, oh, look, I've got money. I want to go and buy a CryptoPunk because I've got one in the background, because it's a social signaling status. It's a luxury good in crypto land, much like a Rolex watch is a luxury good in fiat world. So I just think it's lagged. And, I think prices have started stabilizing a lot of the NFT market. A lot of it will go to zero. But out of the, ashes, we will find diamonds in that dust. And I think, there's a lot, that it's only gone through one cycle ever. So we need to figure it out. But I'm very bullish NFTs, the right ones.
As crypto enthusiasts celebrate the groundbreaking approval of spot Bitcoin exchange-traded funds on January 10th, there's notable silence from one prominent user. Despite tens of thousands of users flooding the platform to express their excitement, one regular poster on X, the account SEC government owned by the United States Securities and Exchange Commission, has been radio silent since confirming its account compromise on January 9th. The celebration on X includes the trending hashtag Bitcoin ETF and a maximum score of 100 for the search term Bitcoin ETF on Google Trends. While many acknowledge the historic significance of the 11 issuers receiving approvals to list and trade their Bitcoin ETFs on U.S. exchanges, it's worth noting that this achievement nearly didn't happen. Coinbase Chief Legal Officer Paul Grewal emphasizes that Grayscale's pushback against the SEC played a crucial role in securing the ETF approvals. SEC Commissioner Hester Peirce shares similar sentiments. However, the SEC Government X account, compromised after a mishandled tweet about Bitcoin ETF approvals, has refrained from posting since then, even as X users continue to tag it in posts covering various aspects of the approval process. The SEC's compromised post about the account hack has become the most liked post in its history on X, amassing over 18,000 likes and 8.1 million impressions. Despite this, the broader crypto community is actively engaging with the ETF approval, with significant players like Franklin Templeton updating their X account with laser eyes, a symbol synonymous with Bitcoin advocacy. Bloomberg ETF analyst James Sart anticipates the ETFs to be live for trading as early as January 11th. The question remains, is this the real start of the bull run, or do we need to wait for the Bitcoin halving? Share your thoughts in the comments section below. For more Daily Dose Crypto news, check out these two awesome videos on your screen. Click now and we will see you on the next video.